welcome to ABC Bullion's 360 Weekly Wrap. My name's Bron Sachugi. I'm joined by Nick Frappel, Global General Manager at ABC Bullion. Welcome, Nick.
Hello, Bron.
Last week we sort of talked about gold sort of having targets both up and down and no real clear direction. Anything happening this week to give you...
Not really, no. I'd say that basically it's still acting in a very sideways manner. The positives are that gold closed in US dollars, closed above the weekly turning line. That's kind of what it's been doing lately.
Yep.
So it's remaining positive, made a slightly higher high. What I'd like to see is gold maybe go above 1990, a close above 1990, or particularly a close above 2015. Then I think you'd have the real signs of a bullish outcome. On the downside, I guess below 1900 is a worrying level. But it's done the right things, but it's really sideways.
And silver, I mean, is it seems to be coiling even a bit tighter?
Yeah, a little bit. I'd say the thing about both silver and gold, both sideways, but what you're seeing is futures actors coming in and buying more longs, right. Not short covering, but adding fresh long positions. So gold, they added about 1.1 million ounces in the week ending last Tuesday. Silver, managed money longs, they added 16.5 million. So people are actually adding at these levels. That's positive. There aren't really that many shorts around. Added a little bit more, but they're both trading fairly sideways. For silver, I think above 27.80 would be the level where I think, okay, this is definitely looking like a bullish resolution.
Yep.
Below 26, now look, 26.30 last week, I think was low, and that was pretty sharply rejected. 26, I think last week I said it was a critical level, still think it's important. Close below 26, you might look at 24 quite quickly.
And the Aussie dollar still really...
Yeah, exactly. A little bit indeterminate. Closed quite close to the open. Still in a bullish trend. The Aussie had good data last week. So Australia had good unemployment, I think 6.8%, some better than expected job creation numbers. That was all good. You might have expected the Aussie dollar to do better. But in fact, the US dollar had sort of some fairly good outcomes as well. Had some good housing starts, some good commentary, which helped the dollar index. One thing to note about the Aussie last week, or the week, last week's data, is that the managed money shorts actually bought back a quarter of their positions in the week leading up to last Tuesday, the last reportable day. That's a really, really big chunk of buying back. I think it's like 1.5 billion. The Aussie didn't really do. It's not like that propelled the Aussie higher. So that's kind of interesting. If you look at it from a dollar lens, a dollar index lens, then it's basing out really nicely. I think you have to get above 93.80 to see chance for good dollar bounce. But we're not there yet.
And what about oil? You mentioned last week there's been some developments.
Yeah, interesting. So the managed money community has added to their shorts even more. In fact, if you look at it over the space of the last month, short bets against crude have doubled. Crude initially fell, but the Saudis issued a fairly strongly worded announcement. They thought that other members of OPEC, free riders, that they were overproducing, particularly I think the UAE, and they say you guys are overproducing, and they kind of jawboned the crude oil price quite sharply higher last week.
Okay, good. Interesting. Stay in touch with the markets by following us on our social channels or at abcbullion.com. Until next time, thank you.
Thanks.